Hey everyone, it's PK here. Hope you're doing really well. I'm here in Kalinga Park. You can hear the birds and kids really loudly. Today I'm going to talk about how much money do you need to start in property investing. So this is a question that I get asked all the time. How much do I need to start? And if you ask different people, they'll give you a different answer because there are many variables involved with answering this question. So for example, it depends on whether you're happy to take lender's mortgage insurance out or not. If you are happy to take lender's mortgage insurance out, then you can go up to a 85, 90, 95% leverage ratio, LVR, which means you only need to put down 5% deposit, 10% deposit, 15% deposit. Or if you don't want to put down or take out LMI, lender's mortgage insurance, then you need to put down more deposit. I've done a different video on why I think, not why I think, but why the numbers show that lender's mortgage insurance is a terrific idea and it actually doesn't cost the money that people think that it does. So that's one variable that goes into figuring out how much you need. The other variable that goes into figuring out how much you need to start is stamp duty. So stamp duty is different in different states. So for example, in Queensland, the variable cost of stamp duty is much lower than what it is in Victoria, what it is in New South Wales. In Tasmania, it's quite affordable as well. Other places, not so much. So it's not a blanket rule, right? So these transaction costs vary depending on state to state, stamp duty. So LMI stamp duty. The third one is legal fees. Legal fees should be around $1,000 to $1,500. Anything too much more than that, you're paying too much. Anything too less than that, you're probably not getting the quality of service that you need, and that can expose you when it comes to title searches and things like that. So that's the third variable that goes into figuring out how much you need to start. The fourth variable that goes into figuring out how much you need to start is a cash buffer. Now, I recommend you don't just jump into property investing and put your last dollar or last cent into your first or second or third property. You should always have a bit of a cash buffer. We buy properties, and so should you, that have less than 1 week's vacancy every single year, ideally no vacancy, but you should always budget for 2 weeks vacancy or thereabouts. Not that we'll experience it if you do it correctly, but it's good to have that fail safe. So the fourth consideration, therefore, is a cash buffer. And so those are the four, you could say, more obvious considerations. The fifth consideration is really how expensive is the property or the suburb that you want to buy in the first place. And I know that if you go to a development company or a buyer's agent, wearing a mask as a buyer's agent, but really they're selling brand new off the plan apartments, or if they're selling house and land packages, whether it's in Werribee or whether it's in North Lakes, Mango Hill in Brisbane, or whether it's out in Perth, there's a whole lot of new house and land packages going on. All of these types of buyer's agents, or really marketeers for developers that pitch you the story of really good depreciation benefits, that pitch you the story of paying off your mortgage in 7 years, that pitch you the story that new stock or new homes are always better than established homes. They're all really just marketeers for the developer who has developed stock and is trying to sell it. And so therefore they need a front end to market that. So these people will say that you need $60,000 to $70,000 at least to get into property investing. And why do they say that? Because really a brand new property, whether it's a house and land package or off the plan apartment, is going to cost you around $500,000, right? Just because the build cost is $350 and the land would be around $150 at least. So they will say, look, you're a brand new property investor, here's the shiny brochure. You really need to save up $60,000, $70,000 to get into the game. But look, that's really not the case, because you really shouldn't be buying from one of these so-called buyer's agents. You don't need to buy from any buyer's agent, to be honest, but especially not these types of folks who make money from you, $15,000, and they also make money from the developer, more like $30,000, $45,000. So who are they working for? But that's a different story. To buy a brand new house and land package, yes, it's going to cost you $500,000, but as an investor, you don't need to save up $60,000, $70,000. Here's the answer. You can get into property investing for $30,000 to $40,000. And you're asking, how's that going to happen? Especially for you guys that live in Melbourne or Sydney, because you can only be what you can see. There's an old saying, what you're seeing around you is that houses are at least $1 million and apartments are at least $500,000. So you're thinking, on earth am I going to get into property investing for less than $40,000? But let's say you take out lender's mortgage insurance, which is a separate video, very useful tool, doesn't cost much at all. In fact, it doesn't cost almost anything if you do it right. Then you can buy with $30,000 or $30,000 to $40,000, including transaction fee. You can buy a house up to about $300,000 or very easily $250,000. And I'll give you a few examples of why that's a really good idea. So about 3 years ago, a whole bunch of clients were buying in northwest Tasmania and other places around Tasmania as well. Sub $300,000. This was just 3 years ago. Fast forward now, all those suburbs have gone up 20-30%. All of those suburbs have given $50,000, $70,000, $80,000 gains in 3 years. So just think about it. If you were a poor investor listening to developers back 3 years ago, and you had $30,000 or $35,000, and you were listening to developers saying that you need to save up $70,000, then you may have got to $70,000 now, 3 years later, but you've missed out on $50,000, $60,000, $70,000 of gains in Tasmania. The same can be said for parts of regional Victoria, Bendigo, Ballarat. Here's a good one, Mildura. Mildura, very much under $300,000 2 or 3 years ago, and it's already had almost 20% price growth in the last 2 or so years. So once again, if you just had $30,000 to $40,000 and you invested in a place like Mildura 2 or 3 years ago, you're coming out with 20% or thereabout savings, not savings, gains, capital growth. Not to mention it was positive cash flow the whole time. Not to mention that you might have been able to get it under market value if you were doing it right. Not to mention there's potential for value add. Right? So the whole point is that you don't need $70,000 to start your property investment journey. You can actually start for not even $40,000, sub $40,000, including all transaction costs. And sure, you might have had to pay $1,000 or $2,000 in lender's mortgage insurance. But if you had bought in Tasmania, if you'd bought in regional Victoria, if you'd bought in a place like Mildura, then $1,000 or $2,000 of lender's mortgage insurance is just insignificant in the scheme of things, right? So if you're a property investor and you're sort of thinking, look, I've only got $30,000, $35,000, $40,000 in the bank, I need to save up another $20,000, $30,000, it's really not the case. That might have been drilled into you by people who are trying to sell you more expensive properties, but you should never buy property of anyone. You should do your research yourself. You should become educated. You should do your due diligence. Even if you end up outsourcing it to, one of these buyer's agents or something, definitely not a marketeer, but a legitimate buyer's agent. Even if you do that, make sure you do the research yourself. This is your money. No one cares about your money as much as you do. All right, so $30,000 to $40,000 is all you need to start your property investment journey. And if you buy the combination of high growth, not after 10 years, but in the first 2-3 years, and positive cash flow, then you can take that equity and buy the second house and the third house. I can list dozens of examples of not only my clients, but plenty of investors around Australia who started off with $40,000 and fast forward 5 years, they've got 3 or 4 properties under their belt. All of them are positive cash flow. There's one recently that's producing about $19,000 of passive income after 4 years into his journey, and he started with $35,000. Now, that is not an easy outcome to achieve. You need to be really well educated. You need to be really attuned with data and embrace data, but that's what's possible. Okay, so don't don't sort of go into your cocoon or hermitage, so to speak. If you only have 30-40, that is enough. Take action. I'm not spruiking. This is one of the best times to buy property in Australia. I know plenty of people, even more better than myself as well, people who are much more successful than even my portfolio, let's say, that are really gung-ho, that are investing a lot of money, a lot of their own money in residential real estate. People who have portfolio values of 5, 10, 15 million dollars with LVR across the portfolio of 30, 40, 50%. They are taking that equity and they're investing now. I'll explain in future videos why that is. But this is a great time. So if you have $30,000, $35,000, $40,000, that's all you need. The Milduras of 2 years ago, the Burnies, the Tasmanias of 2 or 3 years ago, they exist right now as well. Okay, markets within markets. Hope that makes sense, guys. I'll chuck a link in either above or below. You can find out more information. Otherwise, please comment. Please comment what you think. Please let me know if you agree. Let me know if you disagree. Any personal experiences or anything like that. I want to hear from you. I want to get some energy back. All right, give me a like or love if it makes sense as well. Hopefully that was really useful, guys. Have a great day. Bye.